I'm an income focused investor. So one of the things I most focus on this page of a security is the dividend yield. And so I see the 8.56% dividend yield. So it's an attractive yield. And, I like that a lot. So for BDCs, one of the most common valuation metrics is the book value. And so you can see here trades at a 1.13 times its underlying book value, which means you're basically paying a 13% premium to the private market value of the underlying holdings when you buy shares in ARCC. So for example, if you look at its long term, you see really high total returns since it went public earlier, a little over 20 years ago. That's a really good return for 20 years. So ARCC is definitely a good long-term compounder. So on this page, I really like that they list the expense ratio right off the bat. And this is important because it tells you how diversified the fund is. And so I can see what sectors it has a lot of exposure to and which ones it doesn't. But over 40% of the portfolio is in the top 10 alone. However, if all you care about is a low fund expense ratio and a really good yield plus growth profile, SCHD is arguably as good as it gets because it's an A+ rating for both expense ratio, so it's very cheap, and it has a phenomenal dividend track record. It has a 13-year dividend growth streak, which is phenomenal. It's grown its dividend at a very consistently high pace over the past 12 months, 3 years, 5 years, and 10 years. And so it's a phenomenal dividend growth machine. I like using the Seeking Alpha data to just give me a quick overview and a sense of the stock to see if it's even worth pursuing more and where I should focus my research. So hopefully that was useful for you, gave you some insights into how you can better use Seeking Alpha to research stocks and ETFs, and also some insights behind the curtain to how I research them.